Third 2018 meeting of the Monetary Policy Committee ends with the monetary policy rate maintained at 14%. The Nigerian Ports Authority (NPA) lifts 10-day suspension placed on shipping lines. Oil and gas sector, Nigeria and Niger signed Memorandum of Understanding. This is Business Express reaching you from our Abuja studios as we continue to look at activities that shape the economy. I am Amina Nujaim, glad to have you join us today. Now in the news today, a total of 142 enterprises have been successfully privatized since the commencement of the federal government privatization program in the 1980s to December of 2017, with only 63% of them currently performing, while the remaining 37% are not. The Director General of the Bureau of Public Enterprise, BPE, Alex Oko, who made this known at the opening Enterprise Stakeholders and Investors Forum in Abuja, said a total of 94 enterprises have been successfully monitored, covering critical sectors of the Nigerian economy from transport sector to vehicle assembly plants, oil palm, cement, hospitality, fertilizer, bricks and clay, mines and steel, national facilities, oil and gas, ports, power and communications. The Nigerian Ports Authority (NPA) has lifted the 10-day suspension it placed last week on 4 shipping lines. They include Misk Line and COSCO. The NPA Assistant General Manager Corporate Strategic Communications, Isa Shuaib, who confirmed this in Lagos, stressed that the new directive was sequel to a review of the suspension order to enable the affected companies acquire additional holding bays. He, however, said the affected shipping companies have been given 2 weeks, beginning from Friday, the 20th of July 2018, to comply with 4 conditions to ensure sustainable relationship. Nigeria and the Republic of Niger have signed a Memorandum of Understanding on hydrocarbon pipeline and refinery project aimed at creating a more favorable investment opportunity in the downstream sector, as well as enhancing cross-border economic development. At the ceremony witnessed by President Muhammadu Buhari and his Nigerian counterpart Muhammadu Isufu, technical and steering committees for the project were also inaugurated. State House correspondent Adam Musambo has this report.
The Minister of State for Petroleum Resources, Dr. Ibe Kachiku, signed for Nigeria, while the Nigerian Energy Minister, Fumakaye Gado, signed for his country. The mutually beneficial strategic initiative driven by the existing friendly relations between Nigeria and Niger comprised the construction of crude oil pipelines from the Republic of Niger to Nigeria, as well as the establishment of a new refinery at a border town in Katsina, Nigeria. President Muhammadu Buhari and his Nigerian counterpart, Muhammadu Isufu, promised every support of their respective governments towards the successful execution of the projects with vigor and determination.
Nigeria sees this cooperation on crude oil export from the Republic of Niger and construction of refinery facilities in Katsina State as a win-win for both nations. The initiative will not only provide a reliable market for the stranded crude from Niger Republic, but will also provide petroleum products for Nigeria as it aggressively pursues its aspiration on petroleum product self-sufficiency.
It is also necessary also to say that it will strengthen the political, economic links as well as socio-cultural links which our countries have undertaken to develop. Let us therefore commit ourselves to this enterprise, and may God bless our two people and our two countries.
During the event, President Buhari inaugurated the joint steering as well as technical committees for the projects and given up to December this year to come up with a detailed roadmap and implementation guidelines. These include bankable feasibility studies, optimal project site and pipeline route details, as well as selecting consortia of investors for both the pipeline and refinery projects.
It is my hope that the current frontier exploration efforts in the northern part of the country, Chad Basin, Gongola Basin, Sokoto Basin, Bida Basin, and Benue Trough, will also result in the provision of additional hydrocarbon inflow to the corridors of the proposed pipelines and a potential refinery around Kaduna axis.
The Minister of State for Petroleum Resources, Dr. Ibe Kachiku, who announced the receipt of several expressions of interest from prospective investors, also enumerated the benefits derivable from the projects.
Once the refinery is built, we expect that employment will improve, we expect that the income streams of both countries will improve, we expect that product availability, especially in downstream, will improve, and so some of the difficulties we're having in terms of meeting our product needs will reduce.
By one of the investors who are willing to invest almost $2 billion, the funds are coming from abroad, from major investors from the United States, Canada, England, and the Middle East. And it's going to be like a 50,000 barrel refinery, which eventually we intend to scale it up to 100,000 barrels with the feedstock crude coming from Niger Republic.
For us in Kaduna State, this is a very memorable moment, and we look forward to full implementation, as it will provide economic benefits to our people and social benefits. It will also go a long way in bringing our two peoples together.
And we must at this point commend and congratulate Mr. President because of the fact that he has done, one, restored state confidence for the country Nigeria, for foreign investors to even begin to come back to Nigeria and make investments. On our own part as the National Assembly, this is strategic, and I believe this will work out very well for our country and for our democracy.
It will be recalled that President Muhammadu Buhari in the year 2016 developed and launched the 7 big wins aimed at repositioning the Nigerian oil and gas industry with refinery and local production capacity as the 4th priority in the roadmap. From the State House, Adamu Sambu, NTA News.
Many thanks, Adamu Sambu. What are the benefits of this MOU? When will it come into fruition? How can the private sector play a role in this memorandum of understanding? These are some of the questions Business Express will be addressing in our next edition. Nigeria's Monetary Policy Committee has retained monetary rate MPR at 14%, as well as retained other policy parameters of the economy. The Central Bank Governor Godwin Emefiele said after this 262nd NPC meeting, where 7 out of the 10 members voted to hold all key policies after a careful exhaustion of options before them. The cash reserve ratio was retained at 22.5%, liquidity ratio at 30%, and asymmetric corridor at plus 200 and minus 500 basis points around the NPR.
Would weaken consumption and raise the cost of borrowing to investors in the domestic economy. In addition, the policy would trigger repricing of financial assets by deposit money banks and further constricting to the real sector that will promote a non-inclusive growth without development.
The NPC noted with concern the drop in foreign reserves and called for the speedy implementation of the 2018 budget and the ERGP, as well as a long-term solution to the incessant clashes. The CBN governor described the outlook for the second half of 2018 as positive. Joining us from Lagos to speak on the issues is Mr. Johnson Chukwu. He is an economic financial analyst and managing director, Cowrie Asset Management. Glad to have you join us on Business Express.
Pleasure.
Now, there has been expectations that the MPR will be maintained, and it has been maintained. What do you make of this decision?
It was the most appropriate thing for the Monetary Policy Committee to do at this point in time. If you look at the containing factors, one, we still have a slow economic growth. The first quarter GDP growth was only 1.95%. So the Monetary Policy Committee was not in a position to tighten further because they really need to allow liquidity into the system. Similarly, the outlook for inflation and liquidity is that they are going to see a lot of liquidity come into the system. And like the CBN governor said in his announcement of Monetary Policy Committee decision, we should expect that electioneering expenditure will hit the economy very soon. And we should also expect that the disbursement of 2.87 trillion capital expenditure budget of the federal government will also be released in a short while. Added to the fact that we should expect some inflationary pressure coming from the displacement of farmers in the Benue and the North Central states. So these factors will actually put a lot of pressure on current inflationary trend and may lead to a reversal of inflationary trend. So the Central Bank and the Monetary Policy Committee was not in a position to loosen, given that the outlook for liquidity in the near future is quite high. To balance the two, the low growth GDP growth rate and the possibility that we see a lot of liquidity injection into the economy, the appropriate thing for the Monetary Committee to do was to keep rates at their current level, which is what they did.
Right. Despite the positive outlook, according to the CBN governor, he did give favorable conditions for taking the decisions that they did. Could you help us expatiate on the reasons why they decided to maintain the rates?
One is that, like the CBN governor mentioned, the GDP growth rate is still very weak. The economy should ordinarily be growing at much above 5%, but the GDP is just growing at less than 2%. So that means that the economy requires some stimulus. But unfortunately, we are in an election period at a time when a lot of election-related expenditure will hit the economy. And also, the CBN governor pointed out that we've seen a lot of displacement of farmers, which could lead to an uptick in food inflation. So if we inject liquidity into the economy, and we know what inflation is that a simple definition of inflation is that when so much liquidity is pursuing few goods. So the central bank could not inject liquidity into the system. As a result of the fact that we expect a lot of liquidity to come from electionary expenditure, from release of capital expenditure component of the federal government 2018 budget. And these factors are factors that if you allow additional liquidity by reducing either the cash reserve ratio or the monetary policy ratio or liquidity ratio, you're going to have a liquidity overhang that could lead to a reversal of the gains we've achieved in inflation. If you cast your mind back to January 2017, we had an inflation rate of 18.72%. Now we're dealing with inflation rate of only 11.23%. That's a material improvement. So if you allow liquidity to come into the system beyond the improvement in productivity, you're going to see a reversal of that trend, and we could see an uptick in inflation. So these are the factors that the Monetary Policy Committee considered in deciding to hold monetary policy rates at current levels.
Now, Mr. Johnson Chukwu, one of the issues that did come up is that despite the fact that the MPR has been maintained at 14%, banks have been lending at a higher rate. And the CBN is hoping for more cash flow within the economic system. What do you think should be done in the long run to check this?
Well, interestingly, banks have been taking their cue not from monetary policy rate, but more of from return on risk-free instruments like treasury bills. If you cast your mind back again to middle of last year, up to middle of last year, we saw that at that point, rate or yield on treasury bills was above close to 20%. We saw coupon of 18.6%, 18.7% treasury bills. So the banks, being rational, being capitalists as they are, would ordinarily want to put their money where they have minimal risk and possibly highest possible return. And treasury bills yield provided that. So banks shared away from lending to commercial customers that had higher credit rating, had a higher credit risk. And now we have seen some moderation in a treasury bills yield and other federal government debt instruments. So we've also seen some level of moderation in bank lending rate, but that has not gotten to a point that can support productive activities, which is why the central bank said they may adopt some level of quantitative easing. They are going to encourage corporate organizations to issue commercial papers with the central bank and invest in. What that means is that blue chip companies, those companies that have very strong balance sheet and very strong cash flow, can borrow from the public, just issuing notes that are not backed by any security, which the central bank is willing to invest in. They are actually borrowing on their good faith, on the fact that they are known to have strong balance sheet, strong cash flow, and capacity to meet the obligations. And the central bank said they were going to lend to them. What that means is that the central bank wants to intervene in the credit market so as to lend to those who have the capacity to pay back at sub-market rate. Sub-market rate means rates that are below what they would ordinarily have gotten if they had gone to the market to borrow from the commercial banks. That way, they will be bypassing the banks in lending straight to businesses and supporting economic activities at possibly single-digit interest rates.
Brings me to my next question, single-digit interest rates. The CBN was talking about targeting certain specific areas in the economy to encourage growth within the system. Do you see that happening, since there's still the issue of higher interest rate lending between banks and customers?
The central bank, in the deployment of its development finance initiative, has actually done a lot in intervening in the credit market to lend to some selected sectors of the economy that are considered as critical to economic development at sub-market rate. If you look at the fact that the commercial agriculture credit scheme is being extended to commercial agricultural farmers at less than 10%, something like 9%. We have some small and medium-scale enterprises that have been accessing the CBN supported Bank of Industry's credit at sub 10% interest rate. So what the central bank wants to do is obviously to extend that to some industrial outfits. Those companies that ordinarily would not qualify for as small and medium-scale enterprises or agricultural outfits, but are in sectors of the economy that are critical to economic growth and recovery. Take, for instance, those operators in the cement industry that have been creating jobs, operators in the oil and gas sector, particularly the midstream and upstream operators, not the downstream operators, operators in the telecommunications sector. These sectors are very critical to economic recovery, given that central bank is already supporting the small and medium-scale enterprises and agricultural sector. They see these other sectors, manufacturing sector, for instance, industrial manufacturers, they might need to be able to access credit as less than current commercial rate of 20-22%. And then that will help them to be more profitable, and that will also help them to create more employment and will support faster economic recovery and growth.
Now, there is no doubt that the positive forecast for the second half of 2018 is positive. Could you shed more light on what we should look out for that is making this outlook positive?
Well, when we say it's positive, it's a relative term. We are coming from a recession in 2016, and now we've seen steady economic recovery. The economy will most likely close the year on a positive note, positive GDP growth rate. But we also have to recognize there are some headwinds. One, we're going to see a situation where a lot of policy actions will be delayed, particularly policy actions that have the capacity to unsettle the voting population. The government will do everything to massage the ego of politicians, of electorates. So you're not going to see any of the difficult policy defining initiatives in the remaining part of the year. But the positive thing we should expect this year is that we've seen oil price has remained above $70, where our crude production is still up to 1.7 million barrels per day. That will make sure that we have sustained foreign exchange earnings, though that may moderate compared to what we had about this time last year. Then, on the agricultural sector, we are seeing reasonable improvement in fairly good weather. But on the flip side of it, we've also seen displacement of farmers in the north central zone and the northeast zone. That could lead to a reduction in food production. But the major things going for the economy is that we have strong foreign exchange earnings coming from crude oil, which helps to influence the availability of FX for businesses. And that's very critical component of our economic equation. We must have the FX to support other economic activities, given the level of dependence of this economy on imported raw materials and imported consumer goods. So on the positive side, the strongest positive we have going for us is that oil price outlook remains very strong and very positive. Prices are still going to remain above $65 per barrel. The other things, you have also some drawbacks. Like I mentioned earlier, we're going to see a lot of political activities. We might see an increase in the level of attacks on oil pipelines as some political elements want to extract political favors or recognition. We could see that in the coming months. I mentioned the issue of the unsettled environment in the North Central. These factors will also be a drawback to the positive economic outlook we have in the remaining part of the year.
So much to look forward to the second half of 2018. It has been a pleasure, and it is always a pleasure to have you join us on Business Express, Mr. Johnson Chukwu. Thanks.
My pleasure.
Now moving on to other business news. Gold inched higher on Tuesday as the dollar slipped, but the precious metal struggled to stabilize even after weeks of losses. Spot gold was 0.2% firmer at $1,226.31 an ounce, while U.S. gold futures for August delivery rose to 0.1% to $1,226.50 an ounce. The dollar index, which measures the currency against a basket of 6 major currencies, fell 0.2% after touching a one-year high last week. Gold has shed more than 10% since touching a peak of $1,365.23 in mid-April. Still on commodities, cocoa prices declined by 0.78% to $2,304 per metric ton on forecasts of weak Indonesian output. Let's take a look at a graphic summary of commodities across the globe. The Nigerian stock market resumed Wednesday, recording gains after ending the session in negative on Tuesday. Let's join Bosede Abel for a look at figures from the Nigerian Stock Exchange.
Trading from the Nigerian Stock Exchange saw equities market close in the red, depreciating by 0.70 basis points, despite the all-share index positive gains recorded Monday of 0.03 basis points. Market capitalization stood at 13.2 trillion naira. Medview Air, Transcorp and Zenith Bank were the most traded stocks. Cotix, Custodian and Wapik led the gainers table, while Better Glass led the losers chart.
Many thanks, Bosede. What are the numbers for stocks outside the country? Let's take a look again from Bosede Abel.
Trading in the African markets were mixed. Ghana's GSE Composite Index rose by 0.08%, while Tunisia's Tunidex declined 0.17%, Namibia Overall Index 0.34%, Kenya Nairobi All Share 0.03%, and South Africa's JSE Africa Top 40 also depreciated by 0.43%. In the U.S., stocks closed higher Tuesday After strong financial results from Google parent Alphabet led a wave of upbeat corporate earnings. Dow Jones Industrial Average rose 197.65 points to 25,241.94. S&P 500 added 0.5% and Nasdaq Composite originally rose more than 1% to an all-time high, but failed to hold those gains and closed just below break-even at 7,840.77. European markets closed higher, bouncing back from the weak sentiment seen in the previous session. DAX rose 1.12%, FTSE 0.70%, and CAC also appreciated 1.04%. Asian stocks advanced with China outperforming regional markets as investors kept an eye on bond yields and the falling Chinese yuan. Shanghai Composite advanced 1.62 to close at 2,905.94. Hang Seng Index gained 1.44%, while Nikkei remained unchanged.
Thank you, Bosede. We now wrap up with a look at how major currencies around the globe are trading this Wednesday. Well, that's it on Business Express Day. Let's do it again. On our next edition, I'm Amina Nujaim. Thank you for joining us on the program.